Hi everyone, welcome back to the Mass Retirees Weekly Update. Today's Friday, March 3rd. I'm Sean Duhamel. Thank you so much for joining with us and tuning in again this week. Now I've got a lot of material to cover, so let me just jump right into things. First and foremost, the Group Insurance Commission just yesterday morning finalized its procurement process for FY24. The final step of the process, of course, was the finalization and the announcement of the premium contribution rate. So in other words, the monthly costs that are charged to you and to active employees for your health insurance if you're insured through the GIC. Those rates were established by the Commission yesterday morning, and it's relatively good news. Now, let me say at the outset that anytime we have absolutely even the smallest increase in health insurance costs, that's not a good thing. It's not a good thing for anyone, but in particular, if you're a retiree living on a fixed income, it can be devastating. So we always keep that in mind. I know the GIC keeps that in mind. Everyone, quite honestly, who's involved here in Massachusetts with health insurance, the cost of these benefits and how individuals can go about paying for them are always top of mind anytime you're approaching these policies. Now, that being said, the good news is that the price increase on a monthly basis across all of the GIC plans has actually come in less than what was originally feared or originally predicted. Now, in the private sector, both here in Massachusetts as well as around the country, the average increase for 2023 has been somewhere between, say, 6 to 8%, and in some cases even higher than that on an individual plan. But on average, the increase in the private sector is pretty much fallen into that range of 6 to 8%, and that's pretty much what the GIC was anticipating even just a month ago, heading into the final steps of procurement and establishing the premium contribution rates. Now, the good news is, again, the final prices came in lower than what everyone had anticipated. And there's a lot of different reasons for that. One being the work that is done on a daily basis by the staff at the GIC, also working with the health insurance carriers that we have here in Massachusetts, whether it be Unicare or Point32, which is now the parent company of both Harvard Pilgrim and Tufts, or the Mass General Brigham Health Plan, Neighborhood Health Plan, certainly Blue Cross Blue Shield at the municipal level. All of these companies are continually reevaluating and trying to do everything possible to keep those annual insurance premium increases either as low as possible or flat. That's the goal. So across all of the GIC plans, and let's start off by talking about Medicare, because Medicare is the plan that most of our members, the vast majority of our members, whether it's through your own eligibility or through a spouse, 90-some odd % of our members and retirees in general who are age 65 and older are eligible for Medicare. So across all of the GIC's Medicare plans, and they offer 4 different plans, 3 Medicare supplement plans, and then 1 Medicare Advantage plan that's offered through Tufts. The average increase across all 4 plans is 2.3%. Now, the bulk of our members belong to the Unicare Medicare Extension Plan, what we used to refer to as the OME. Now it is just the Unicare Medicare Extension Plan, UME, I guess you'd say. The Unicare plan for retirees, which again is the most popular plan that the GIC offers, is coming in at an increase of 2.8%. which is still well below the state and national averages. But again, we're never going to be happy with any increase. Now, for the non-Medicare plans, it gets a little bit more complicated because there are a variety of different health insurance providers being offered on the non-Medicare side. And many of these plans have changed names or shifted the plan design a little bit going into FY24. So let me say at the outset, and this is something we have been saying now for months, retirees need to pay even greater attention going into this year's open enrollment, which will take place through April and into May. And at the local level, the dates may differ a little bit, but generally during the springtime is when open enrollment occurs. You cannot assume that your health insurance benefits or even the health insurance carrier that you have right now is going to remain exactly the same from one fiscal year to the next. Particularly right now if you're insured through the GIC, but I also know that some changes have taken place at the local level. So it is very important that you pay attention to videos like this, the email message that comes out from us every Friday, as well as from any correspondence that you may receive from the GIC, from your health insurance providers, from the city or town that you happen to be retired from, or the school district that you're retired from. You have to pay attention to the information that's being sent to you. And I know at times it can be overwhelming and it's confusing, even for folks like myself and our team here at Mass Retirees who work on this stuff every single day. It can still be a pretty daunting process of digging through all the details and making sense of it all. So after you receive this information, if you have questions or concerns, reach out to us. That's why we're here. A huge part of what we do is working with our members on health insurance issues. So whether it be health insurance claims problems, questions about coverage, or just making sense of things during open enrollment so you can make an informed decision. Now, in addition to making sure that the doctors and the medical providers that you're seeing are part of the insurance plan that you're going to enroll in, you also, of course, want to pay attention to price. And the prices are going to vary depending on the plan that you're insured in and where you happen to live and the coverage that you need. There's no such thing as a one-size-fits-all policy for all retirees or even all active employees. So it is important to pay attention to the details, pay attention to price, because some of these changes, if you opt to do nothing and you end up in the default plan, for instance, the Tufts Navigator is being discontinued, and if you are in the Navigator plan today and you do not choose to do anything on your own, the GIC will default your enrollment into the Harvard Pilgrim plan that is replacing the Navigator plan. And the benefits are largely the same in terms of plan design. But what is different is the cost of the plan is going to increase during the June pension payment period. So you don't want to have any surprises when it comes to your pension of all of a sudden realizing that a greater reduction or contribution has taken place for health insurance. So pay attention to the details. Now back to the non-Medicare plans. The average increase across all of the non-Medicare health plans that the GIC carries comes in at 5.7%. And again, that's the average across all of the plans. That average has been weighted based on enrollment in the plan. So greater weight has been given to the most popular plans, which makes sense because we want to make sure that that average is going to be reflective of what people are actually paying. So across all of the plans, the average increase is 5.7%. However, there are some plans being offered by the GIC where that average or the actual increase in price is higher than 5.7%. So pay attention to the details. In addition to the information being mailed out at the end of March by the GIC, we are going to press at least a week to 2 weeks early with our May newsletter with the hope of getting it in the hands of retirees in early April. So that way you'll have all of the information that you need between what we're publishing. We will have our full GIC premium rate chart once again published. And that will be in addition to the information that's being sent to you by the GIC. Now, as we have reported previously, the GIC will not be holding health insurance health fairs this year in person. Everything will be virtual, either on the computer or via telephone. The GIC has scheduled several information sessions for both retirees and active employees to help you make sense of everything involving your health insurance. Now, in addition to all of this, we are hearing increased rumbling at the local level of cities and towns and school districts potentially looking to make changes to their health insurance plans, not necessarily for the coming fiscal year, but heading into FY25. A lot of times this activity will start a good year to year and a half before any of those changes are set to take effect. So in order for us to get out in front and ahead of anything that may be coming down the road that could negatively impact retirees, we will be holding a special virtual meeting of all of our PEC representatives, the Public Employee Committee representatives that we appoint at the local level, in addition to the Retiree Insurance Advisory Committee members from across the state. That meeting will take place on Thursday, March 16th. We just today sent out a paper mailing to all of our PEC members that we have contact information for. We will also be sending out an email blast to all of you early next week. Now, this meeting is not open to just rank and file retirees. You have to be the official PEC or IAC representative who are sitting at the table negotiating health insurance benefits on behalf of local retirees. But if you do not receive either the paper mailing or the email coming from Nancy McGovern early next week, give Nancy a call, reach out to her, let her know that you didn't get the information. That way we can make sure that we have the correct contact information for you and get you signed up to participate in that meeting. And this is something that we're going to continue to do on a more regular basis over the coming months, just because of the amount of potential changes that might be taking place. Now, one last point before I sign off for this week. On Wednesday, Governor Healy filed her first budget proposal of her tenure as governor. We have a full report on our website, massretirees.com, of everything contained in the governor's budget. The governor has proposed a 3% COLA for state and teacher retirees on the current $13,000 base. Now, while we would have loved to have seen a proposal to increase the base as part of the governor's budget, we did not expect it or anticipate it actually being there. Historically speaking, over the past 50 plus years, every change that's come with the COLA, whether it's an increase in the base or change in COLA policy, has always originated within the legislature. It's been a legislative initiative, and we did not anticipate that being any different this year. However, having the support of the governor through that process is absolutely vital, and we are very much appreciative of the support that Governor Healy has given us in the past, and we look forward to working with her and her administration on the COLA, increasing the base, creating a senior COLA law here in Massachusetts, and hopefully doing so during the current legislative session. Now, we have filed legislation, as you know, to increase the state and teacher COLA base to $16,000 beginning in the coming fiscal year. We've also filed legislation to create the senior or enhanced COLA, and we have, over the past several weeks, been meeting with legislative leaders from both parties, and will continue to do so to make every attempt to get these laws passed for the coming fiscal year and have these benefits in place to benefit our members at both the state level as well as the local level. So with that, I'm going to sign off for today. One final point. If you are not yet a Mass Retirees member, please consider doing so. You can visit our website, which again is massretirees.com. You can sign up with us online, both as a member or if you're an active employee interested in receiving information about your retirement. You can subscribe to our newsletter and other publications to help you develop a better understanding and have just a better grasp on your retirement benefits going forward. So with that, I'm going to sign off for today. Thank you so much for tuning in and joining with us again this week, and we will be back to you again next Friday. Take care, everybody.